As we go through the first quarter of 2023, is your investment portfolio best positioned for what lies ahead in the economy and the markets? What are the key factors affecting the economy right now, and which sections of the market look attractive? Today I'm speaking with Dave Kressner, Managing Advisor of Altfest Personal Wealth Management, to get a glimpse into Altfest's 2023 market outlook. Hello everybody, and welcome to Wealth Matters for Physicians by Altfest Personal Wealth Management, the channel that provides key investing and personal financial planning insights to help physicians achieve their key life goals. Before I bring in Dave, a few words about Altfest. For nearly 40 years, Altfest Personal Wealth Management has been helping physicians holistically optimize all areas of their personal financial lives in a fully objective, no commissions manner, while as a legal fiduciary, always putting our physicians' best interests first. As I mentioned, my guest today is Dave Kressner. Dave is a chartered financial analyst, a certified financial planner, and a managing advisor at Altfest Personal Wealth Management. He has been helping and advising physician clients at Altfest for several years. So Dave, what is Altfest's outlook for the markets in 2023?
Right. Well, with interest rates remaining high around the world and inflation high as well, our expectation is that volatility is going to persist in the markets at least through the early part of the year.
So then, Dave, why does Altfest, I know Altfests are very big believers in well-diversified portfolios through various parts of the economic cycle. Why does Altfest believe that a diversified portfolio is a good course of action to take in volatile or uncertain times?
Yeah, particularly in volatile or uncertain times, it's very important to have your portfolio spread across a variety of different asset classes that you would expect to perform differently in different types of markets. You don't want to have all of your eggs in just one basket.
Great, and I think you have a great slide to show a little bit about that, right?
Yeah, why don't we go to that now?
Sounds good.
Great, so as we look at this page, Mike, what we see is the return of different asset classes every year from 2008 through 2022, reading from left to right. Each one of the squares on this chart represents a different asset class with the return for that asset class for each year. And this is an interesting way to look at it because it gives you a sense of how different asset classes perform from year to year, and that no one asset class dominates across every year. And in fact, they can change very dramatically from year to year. So, for example, cash, which is the purple box on this chart, starts in 2008 very high up on the chart with a return in what was a negative year for the market of toward the top. But then we can see just the very next couple of years it's down toward the bottom. And as we follow cash from left to right, we see it seesawing from top to bottom. And if you were to do that with any one of these asset classes, you would see something similar. However, if you take something like the light gray box, which is actually a mixture combining cash, bonds, different types of stocks, and you were to follow that from left to right, what you see is that rather than seesawing so much from top to bottom, it's much closer to the middle of the chart all the way through. And we think that particularly in very volatile markets, it's important to, while you're never going to be at the top of the graph, you're also never going to be at the bottom. So having this more consistent and stable growth is very important.
Thank you very much. That's a very nice explanation. Dave, what is a key characteristic that one can look at regarding investments in order to identify those that might outperform over a market cycle?
Sure, Mike. Well, there's not one killer characteristic. One characteristic that we think is important, at least to be mindful of, is valuation. And this is a pretty straightforward concept in that we think that the price that you pay for something is an important determinant of the return that you can expect to get from it over time. So the higher the price that you pay for something, the lower the expected return, and the lower the price that you pay for something, the higher expected return.
That makes a lot of sense. As of now, in late January 2023, which parts of the market look attractive from a valuation perspective?
Yeah, so I think probably the best thing for us to do is to take a look at a graph that shows just that, Mike.
Let's go to it.
So what we see here, Mike, is the valuation of a variety of different asset classes reading from left to right. Each one of these columns is a different asset class. So for example, starting on the left, treasuries, the next one is US core bonds, and so on and so forth. And what we see in each one of these columns is the valuation of that asset class as of current, which is the circle, then as of December 31st, 2021, so actually the end of last year, and then the zero line running across the middle of the page is the average valuation for each one of these asset classes. So as we described before, generally speaking, the lower the better. So when we look at this, we see that some asset classes have valuations that are well below both where they were last year as well as their historic averages, and in some cases, really quite a bit below. Those are many of the asset classes that we find to be most interesting in this environment. So you can see that the asset classes on this chart that provide the most attractive valuation opportunities are some of the bond categories, so things like treasuries and US core bonds, and then some of the international stock categories, so things like developed market equity or DM equity and emerging market equity or EM equity. By contrast, things like certain US stocks, while certainly less expensive than where they were at the end of 2021, are not yet, don't yet have the level of attractive valuation as some of these other investments.
Thank you very much. Well, thank you very much, Dave, for being on Wealth Matters for Physicians today. You've given our physician audience a great deal of useful information to think about.
Great. Well, thanks so much for having me, Mike.
Our pleasure. If you'd like to discuss the information explained in today's video, receive a complimentary analysis of your investment portfolio or retirement readiness, or discuss any of your other personal financial planning areas with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732 or by emailing Jesse at his email address, which is also in the description of today's video below. If you like today's video, please click the subscribe button below and hit the bell icon to receive notifications each time we send or release a new one. If you think that a fellow physician would find this video interesting or useful, please share it with him or her to help them also get their finances optimized. Lastly, as always, if you have any topics you'd like us to cover, like or dislike certain things that we're doing, or have any other feedback, we'd love to hear from you, so please share your comments in the comments section below. Well, that's all for now, physicians. Thank you very much for watching today's video, and I look forward to being with you in our next one. Until then, be well, remember to keep on optimizing your finances, and let us help you if you'd like.